Thank you very much. First of all, let me take opportunity to thank Dr. Anup and Rati ji. She is busy, yeah. So, creating this nice platform. Best of luck for all such events and bringing such eminent personalities to talk on the floor here. So we just had a conversation with Chandanji, and some of the points you already made about trust, scale. We are going to reiterate those points specifically on the fintech end. So this is a good start, as I see from Chandanji, to dive into the fintech 3.0 embedded, regulated, and trust first innovation. Now, what is 3.0? What is fintech 1.0? FinTech 1.0 is the physical access infrastructure, the bank institution. This is first stage of FinTech, where the credit cards were there, where I don't know whether anybody remember the embossing of the credit card, where people take the stamp. So this is a reminiscence of that time. Then FinTech 2.0 is all digitization, where the online banks available from your computers, there were online transactions started. Now we are in the area of 3.0, as you see, where embedded, regulated, and trust first innovation is focused. So we are going to look at all the applications, all the types of innovations that are happening, and we are going to understand from all three different perspectives. The biggest bank, the fraud and risk point of view, and the startup point of view. So let's dive into it. First question to the Sandeep ji, where trust and scale. How trust and scale work together? Because scaling is happening, you are expert of application. It is scaling like anything, all these applications. How trust is scaling with the all technology? They go hand in hand.
Good morning all. At the outset, let me thank the organizers for hosting us here. Yes, this question does come up in every discussion, that if you are scaling, and that too at a very high speed, do you have a trust layer which is sitting on the top of this, your application, product or service, whatever you may call it? Whether it is scaling at the same speed, whether it is getting strengthened with the required intensity. Now what has happened, if you look at the regulations and the practices that have been introduced in the Indian ecosystem, digital ecosystem, in the last 5 years, you will see that DPI has emerged as one of the single source of truth for most of the decisioning that is happening. So the regulator has been very active in fostering the trust building part. The DPI, along with the framework of account aggregator, UPI, and the DPIP, which is coming in now, phase 1 is already live, and the behavioral biometrics, the insistence on the behavioral biometrics, the contextual intelligence, the making mandatory the 2FA, are those steps which are promising trust building over a layer like UPI, which sees billions of transactions happening per month, very easy to use. But then if there is no trust in such kind of applications, then perhaps we are missing out something. So while scaling anything, any good initiative, just on the basis of it being popular or convenient doesn't help. There has to be a equal effort, there has to be an equal kind of an efforts to be put in, that people believe in all these capacities while they use it, and they do it without any fear. We being a country with a huge population and with diversified demography, cultures, taste, literacy standards, whether the conventional literacy or the digital literacy, whatever you may call it. The section of population which is vulnerable is quite sizable. And it's not only, there is a feeling that people who are digitally illiterate or who are, from educational point of view, are illiterate are the only vulnerable section. It's not like that. Everyone, even the highly qualified person, becomes vulnerable in certain scenarios. So the trust, the attention to the trust as such, it is very much there, and it is being taken care of as we are scaling. So I will stop here and
Sure.
let this discussion go ahead. We'll also like to hear from.
Yeah. So this is the
friends.
same question from fraud risk perspective.
Yeah, he'll be the right person.
Yeah. So basically the same thing that Sandeep sir said about 2FA coming into picture. So at the same time when 2FA is coming, it's a bit, there is an obstacle that we are raising as well for usage of the system. So again, the trust obstacle as well as scaling. So that comes into picture because security comes over with its overheads. So how do you see it?
Right. Thanks, Krishna, for that question, and also thank you, EVENTEX, for having me here. So going back with the numbers, probably the great Albert Einstein once said, "Trust is always a linear, whereas scale is exponential." So going by that front, currently the phase what we are in on the UPI, if we have to talk about, we have scaled exponentially. But whereas when it comes to trust is somewhere we are lacking, because if I have to compare across US or probably European side of it on the financial aspect, they have always been bit reserved when it comes to scaling of a technology. They always have the safety first. But now what we have done, we have scaled in on the infrastructure, and all thanks to the digital public infrastructure what we have in place, we have scaled it up at a pretty humongous speed. But when we want to implement things, that's where it becomes a challenge. If I have to quote some numbers directly from the Ministry of Finance and the RBI, the fraud recovery rate stands at 6% as of now, and the scaling what we are having is at 50%. Whereas the fraud detection rate has gone down pretty high. And also taking few cues from what Sandeep has really pointed out, it's all about the literacy, what we have to boil in down to the lot of folks. And it might be a sort of a confusion as well. Probably another number, close to whatever the fraud or scams we generally encounter, 50% of them go unreported. Why? Because they really do not know whom to approach. Is it the bank, or should we really go ahead and file an FIR on it? Or how can we really get back our money? That becomes another tyranny for a customer or a client. So probably on a banker's perspective, it becomes even more responsible for us to make sure that these fraudulent transactions which really gets out have to be terminated at the first. And that still remains a challenge, even though we have a lot of tools which we cover across, but this is where it is. So we need to have a fine balance between trust and how we are scaling it up. Probably that's where I would like to rest my thoughts.
That's a very insightful answer with lots of numbers. So we have two views from Sandeep ji and Manoj. Now from startup perspective, Vijayan, how do you see, because startup is our driving engine today for India, where all the innovations are happening predominantly from startups. So startups scaling at an exponential, like Einstein said, but how you are building the trust, especially on the fintech side, with all these constraints, DPI increasing and frauds are increasing. How do you think from startup perspective?
So, hi, good morning, everyone. Thanks for this opportunity. So when we are talking about startups, like, although I'm representing the startup perspective. I have worked with a critical market infrastructure institution. So I come from that perspective as well. So first, is this like the startups itself might not be aware of like lots of regulations and things like that. So that part is lacking, but there should be a regulatory championship towards uh, building that, inculcating the aspect of trust into the startups. So that is one thing, because startups always think about scale, like that comes first when it comes to any startup, because that is what makes them thrive, that is what makes them stand out, right? Like when it comes to large institutions which has grown up in such a short span, they have grown up, but they have lagged in lots of regulations, and we have seen like lots of debacles recently, and like lots of startups which are solving for real problems for that matter, where sir has said like two-factor authentication. All of that, a startup tried to avoid and become a frictionless payment, but then that was stopped and like completely banned from operation as recent as September 2025, right? Like, but the solution as such, like the startup idea, the problem it was trying to solve, all of that was really nice. So from that aspect, like regulatory also needs to step in and see from that aspect. Like it is not just about trust, it's about the scale. Because if we start saying it's only about the trust, then it will be like post office of the old days, right? We have achieved so much today because of startups which has come to scale and bring people in. Obviously, the trust matters a lot, and where I see it coming out really well is that the blend of both, right? Like the market infrastructure institutions or the banks being that trust back, and any startup institutions are built on top of that infrastructure layer. So they are bringing the best of both worlds, right? Like say credit cards, which are in tie-up with traditional banks, really scale up well, more than what the traditional banks could do. These startups do really well. They give a really nice interface for mobile. I can just swipe to authenticate a transaction, right? So all of such features would not be thought by traditional who's like thinking of n number of things, whereas the startups think of the customer, right? What they go through, like that particular user journey as such. A startup thinks from that perspective. So that also needs to be brought in.
Right, right. So I see that there is, you have mentioned about the regulatories considering the startups and scaling as an aspect. We are talking about the trust as well. You mentioned about the European regulations like GDPR, which are much stronger, but now we have DPDP Act as well in India, which is notified last November. So how do we get into situation where the regulatories help as well as the big banks help startups to bridge this gap? What do you think, sir?
See, when the first question was about scaling and whether the trust is being matched with the scaling. Now, see, when the scaling happens, it happens with a lot of responsibility. It's not a mindless or some blind scaling. And when you talk about the gaps, now what startups bring in is a lot of agility, quick decisions, a lean framework, very easy to adopt, and a very quick GTM, go to market. Now, when it comes to putting trust on a startup, what we have seen is, I had been on several panels and working groups on startup and fintechs. What we have found is that when it comes to the promoters and when it comes to the board which is there on this startup, and the people who are running this startup, there are frequent changes. That is what has come to our notice. The ideas, they have bright ideas. People are very enthusiastic. There's a lot of energy. But when it comes to delivering something which is business critical and has to sustain, say, over a period of 5 years, then we have found some gaps. And we have also given suggestions on how to firm up the governance, how to plug these gaps. And a lot of progress has happened in that area. RBI has also come up with several notifications on the discipline that has to be there around startups. So all these things are there, but see, unless you have that risk appetite and a bent of mind to promote something which is innovative, which is something new, unless that bent of mind is there, no matter how much trust you built in, how much you fill in the gap, that challenge will always remain.
Right.
So at least at SBI, we don't have all those issues. We have engaged with many startups. In fact, we are having branches also, commercial branches. In Bangalore also there is a branch where these are called startup branches, where the startups can simply walk in and tell about the help that they need on the financial side or on the guidance side. And that is provided through SBI. So that is what...
So that is regulatory help also done by SBI? Is there a
no,
security?
this is our own initiative.
Okay.
Startup branches. We are having 6 as of now all over the country. And these branches have been opened purely from, you can call it a kind of a CSR initiative.
Okay. Okay.
In the technology world. Because otherwise startups' main issue is capital.
Right.
From where to bring capital. The ideas are very bright. They are sustainable also. They are taking all check boxes, as you call them, of the regulator. But then unless the capital is there, how to convert these ideas into reality? How to bring them on the shelf? And as our keynote speaker pointed out, if you are not on the shelf,
Yes.
then you are not existing.
Correct.
So this is the cycle which the startups get into, and steps are being taken to help them to come out of this vicious kind of a cycle.
Yeah. What do you think from, as a fintech detective, how do you see this coming together?
Right, Krishna. So what I feel is, even though you have at one end the bank which is really supporting you for your ideas, what you bring in, at the same time is the core infrastructure to make sure that the trust what you have to gain, initial first 100, 200 set of customers, really be your word of mouth, because they will be the musketeers for you to spread out your product in the market, and they will be your first user set of experience what they really bring in.
Right.
So the first thing what you have to invest is mainly the infrastructure, and also to make sure that you have got certain set of tools with you, because the platform is the main advantage what you bring in as a fintech. So when you associate yourself with a lot of good amount of tools where it supports your consumers, they feel safe that I'm transacting from this app. It might be for the payment, it might be any of the utility which you're gonna do. So that trust factor, if it comes in from the tools what you use, where you are making sure that it is fraud proof, and also based on what regulatory really comes in, it might be a 2-factor authentication, or it might be some dynamic authentication which you bring in. That itself will give you a first sort of an experience where your consumers will speak for yourself, because I know that I have not authorized it. So certainly this transaction cannot go in from my hand. So that sort of a infrastructure what you built in based on the platform what you're trying to scale it up, that brings in lot of comfortability for your consumers, and that will really safeguard them in the days to come. That's
Right.
where I feel.
Right, right. So I think this was a good conversation about the initial trust building, but there are other aspects, like Chandanji also mentioned about the AI aspect of it, and as Vijayan is the vibe coder guru, as as he mentioned in his website, right? So you build an application startup. So how do you think with the recent leaks of cloud AI and you are doing vibe coding with all the AI disrupting everything, the prompt injection is something that is a reality now. So how do you think this AI is impacting our fintech trust?
Okay, so first thing is compartmentalizing, right? In terms of the understanding, I'll tell you like, so vibe coding is about building a product with prompting and coding agents and things like that. So where I come from, I understand the complete architecture of AI, what an LLM means, what it does, like what are the boundaries of it. So I don't just think of it like a magic box, right? Where the problem comes in is when people try it out like a magic box, they just keep tapping all the switches till the light turns on. They don't understand like I switched this button on, but nothing has worked, which means like something would have turned on. It is your ignorance that you haven't gone and checked, right? So that is something which is lacking. And where I come from is product management, and I have never touched code, although I come from a pure computer science engineering background, and I do a lot of coding and things like that. Lately, my career trajectory has been on the product side, where I am very clear in what my requirement is and getting it shipped, right? Like I understand the customers, what are the customer needs, like how can I solve their problem. I think at that level, and I give my product requirement documents to the engineers, and they build it and give it to me. So same is the case when it comes to AI. So instead of giving it to the engineer, I am giving it to the AI. I know what comes out of it, what shouldn't come out of it, like which means I test both positive as well as negative, and not just that, I go to the extent of testing the edge cases. So only when I do all of that, I ship it, right? So all of this, when a person understands completely, they are good to go in handling this. So what happens apparently is that people just give a number of privileges to the AI agents. They don't even understand what changes it makes, and they just kind of in a hurry, they ship it, right? And that is where the problem is. And when it comes to these leaks and things like that, it happens not because of the AI. It happens because of the human error, right? Like no one tries to admit it. They just put the blame on the AI and they just try to get away with it. So I'm completely against such trends. We shouldn't be blaming the AI. It is a tool where we learn with it. And with anything, any learning, it always comes with failures, right? We fail, and we finally succeed. And it doesn't come overnight. Right. Same goes with AI being in the systems, or be it anything. So I come from I'll come from where I've implemented AI solutions in my enterprise AI products, right? Like not in startup. So I always understand what is the risk, right? So I used AI for automation. So having said that, I understand the complete process, right? And even with humans, there are errors, right? Like people know very well that in banking or anything like that, there is always human error. And we just try and identify the possibility where humans could make an error. Is there a way for me to identify with AI, boss, something is wrong, I see a pattern here, please check. Okay, which a human cannot do, because they are looking at that particular application and seeing it becomes a transaction. Whereas AI can look at that application and in other applications, find a pattern in it and say, boss, this is a red flag. I can flag it to the user and say, double check it, right? Or take it to the next user and say, check it again. Give it to the supervisor, or escalate it as much as possible. So all of this is possible with AI, right? Like, it has that capacity which human does not, or like, where we have put humans, they might not be able to, right? So that is where I see AI in financial system identifying risk, or be it anything. It's in the hands of that particular institution, how they want to utilize it. They understand how to put it to use, right? So yeah.
Right. That's a good answer, because you cannot blame everything on AI. It's your responsibility as well. So now we are talking with AI generation coming, product may not be a moat, trust would be a moat. So in that situation, how you see, instead of product, how do we build trust when in the generation of AI, in AI technology? How are you employing AI technologies?
RBI recently came out with a paper on responsible AI. So when we talk about AI, which is a very old concept, it's not something which has come
Right.
in last 3-4 years. It's existing since last 60 years. But of course, the variants like agentic AI and Gen AI are something very new. Now, the regulator is very clear when he talks about free AI, that it comes with governance and accountability and auditability. So whenever you build any model, whatever codes that you are writing, whatever AI that you are using, it has to be something which is very easy to explain to the auditors or to the regulator or even to the customers. And once you have this kind of a transparency inbuilt, then automatically the trust comes. Now, if you create something, you create a product using AI, and you are not able to understand how the decision is being made by this product, then it's very difficult to expect someone to trust that product. And what happens is that when something goes wrong, the customers or anyone would blame someone they know, and they know bank, not the fintech behind it or the platform behind it, though it's a joint responsibility. So again, a paper has come out which very clearly describes as who will be responsible for what. So AI comes with a lot of responsibility. Of course, we have a practice called FEAT, fairness, ethics, accountability, and transparency. So the data on which the model is being trained should be selected in a very judicious manner. There should not be any bias. And you should pick only those data points which are relevant, rather than getting into everything which is available. And then there is something which is called model validation, which is to be done by someone who is not connected with the model building team. Completely autonomous third party, which will keep on validating the model on an ongoing basis. But at the end of the day, what matters is what is the business value that you are going to get out of this model, which again rolls back to the trust. If you build something which is too complicated to understand, nobody is able to tell why it is giving a particular result. And then the business value is also something which is very average. No matter what kind of sophisticated AI you have used, how many agents you have put in, how many codes of Gen AI you have written for that, it won't have traction or acceptability. So that's all I can say.
All right. So RBI is coming up with a paper, or came up with a paper for responsible and explainable auditable AI, which all the startups should be focusing on to go forward. Now, from fraud and risk perspective,
Just one more point.
Please, go ahead.
The tendencies, you can corroborate or may have a different opinion on that. The tendency still is on using the time-tested machine learning mathematical models, rather than going for a full-fledged AI model.
So more deterministic.
Yeah, where it is very easy to explain, and also the forensic part is very strong there.
All right. Makes sense. So from fraud and risk perspective, or you want to continue with that?
Yeah, so one point, Krishna. So that was pretty insightful what Sandeep really mentioned. So one classic case I would like to quote. So way back in 2019-20, when Apple Cards were introduced, so and AI was deployed way back then as well. So based on the algorithm, what it did, it allocated lot of credit cards to men with a higher credit limit rather than women were having a good credit score. And they were challenged by the US regulators because it was out of the equal opportunity game, you know.
Right.
So that's where really a human element really comes in. You really cannot depend lot on AI. And generally what we say is an AI without guardrails is actually a beast which you can't conquer. So there have to be a guardrails, and probably picking up from what Sandeep has mentioned, a model validation is something is like a hygiene activity which has to be carried out every now and then to make sure that you have got a right data points to feed in. Because ultimately, if you do not get your data right, then obviously the suggestions what it's gonna give will not add any value to it. So yes, even on the financial crime and fraud perspective, we make sure that these guardrails are always existing, and also it falls in the purview of the governance what we generally have to comply with.
Right. But again, just to continue with the point that Sandeep made about the traditional tried and tested ML models compared to the new AI, but both needs too much of data, a humongous amount of data. And with recent news, there is with prompt injection, there is a lot of leakage happening, lot of PII data being leaked. So how fraud and risk perspective that can be controlled?
Right. So we have got couple of tools with us. Mainly, if I have to quote some, is threat metrics and biocatch. So what they do is they will try to identify. Let's say if you have changed your device, if it is coming in from a different IP altogether, then there will be a notification sent to the banking systems to make sure that you have to be logged out from a particular app which you have logged in. That's one. Second is on the biocache, that is, it tries to capture your biometrics. And let's say if you have opened an app, and you generally have a tendency, right? You just open an app, you go to your fixed deposits, or you might be going to your savings account, or it might be towards an investment. So it is almost a 3 years of data which we capture, and there is a pattern which we have built in. So a particular consumer, when he opens an app, we try to monitor all this. It is totally an invisible finance is what I generally call, and they are not informed about it, but we try to capture these patterns at the back end and we store it. Let's say tomorrow, if a particular cell is being lost and some other fraudster take controls of that application, if he opens it and he immediately goes to a transfer, that's when it gets a notified. We get a notification and we immediately log them out from the current session what they are on. And also we send out a notification to the bank saying this is a suspicious activity, please log them out and lock the account as well. So this is how we try to monitor and safeguard our clients before they are even susceptible to any sort of a fraudulent transaction which they might run through.
So it's anonymous data pattern matching.
Yes, yes.
Yeah, rather than
Patterns.
heavily using AI you have to keep in the cage.
Yes, yes,
Yeah,
absolutely. And those patterns have to be monitored every now and then to make sure that only the constructive patterns gonna get out. Because sometimes there were some of the cases where a customer will try to change his pattern of operation, and even he gets logged out, and that's pretty annoying as well. Because why am I being logged out? I am a legitimate user of this app. So yes, so on a bank's perspective, it really we need to have a fine line of demarcation in order to match the fraud as well as a customer experience.
So model validation from usage as well as trust perspective.
Absolutely, absolutely.
Oh, wonderful, wonderful. Okay, so now as a last point I wanted to discuss, which Sandeep touched upon. Say today we are talking about embedded applications, all application, whether it's e-commerce, whether it's bill payments, whether it's any travel applications on your mobile, there is payment is embedded. So now whenever everything is smooth, everybody is happy. Whenever anything goes wrong, as you said, everybody blames bank. But nowadays it's very up in open, because either you have paid with Google Pay and payment has not gone in, or you are paying in a, say, another application, bill payment application. So you are blaming bill payment application, which is another startup. Probably you are paying another peer-to-peer payment. He hasn't received, but it has debited from your account. So all these struggles are there. So how, from your perspective, how you handle this issue?
Right. So probably one example. How many of you guys use Uber here? Pretty much all of you, right? Okay. So probably one latest change. If you have linked your Amazon Pay account to your Uber, it's no more functioning because they have stopped having Amazon Pay to be used, because way back then we used to get good amount of reward points as well. Me being a consumer part of it, this was not informed at all. And one fine day when I made the payment, immediately I got to know that my payment switches directly to the cash instead of the online payment, right? So these are some of the issues which we face as a consumer, but we never get notified. So when it comes to this embedded finance, so what we call embedded finance, it's all about having a financial layer on a non-financial platform, right? So when it comes to a trust, we always call this trust as contagious, because when something goes wrong, we as a consumers, we try to reach out to a lot of folks. It might be a bank, it might be the fintech platform on which you're operating, or finally it might be a end user. So these three parties are to be managed well. So what I feel, when we are going in any sort of a fintech solution, there has to be an equal responsibility across these three parties who are operating, and also an end consumer has to be educated about who is who. When there are any sort of an issues, whom to contact, there has to be a good number of numbers to be given, probably a mail IDs to be given. So this has to be incorporated in your FAQs. So this will make a lot of things easier for an end client or a consumer to operate, as well as all of us, let it be a bank, fintech, and also a retailer. So we all have an equal responsibility in managing the platform well. Instead of just, if any sort of a problem, I'm not here. Instead, let's say even the recent cap which RBI has gotten, right? How many of you guys use Phone Pay? Right, so and Google Pay? Almost all, right? So now if you see the current numbers again, sorry, I just go back to the numbers because that's what it really talks a good value. So Phone Pay has got the highest number of users as of now, 43, 44% of it, and somewhere around 35% is of Google Pay. RBI has clearly mentioned you cannot have more than 30% of users traffic to be driven by your application. Even though it was implemented way back then in 2022-23, but still it's not the case. So even though we have slightly regulated it and we have brought down the numbers, so that's where probably you have your beam, which is coming in from the banker side of it, and also you have this Amazon Pay as well. So finally, to just rest my words, it's all the parties' equal responsibility when there is any sort of a problem, and also keep your end consumer or your end client informed when there is any sort of an issue really comes up.
Right. So we don't want to have indigo moment with any of
Absolutely, Krishna. Absolutely. And people keep, and that was the worst, where the front office were being bashed, but yeah, they can't do much about it.
Right. So as you said, Sandeep ji, about everybody blames bank. So how, whenever such a kind of ping ponging happening, how bank enables to resolve this issue?
We own up.
Okay.
It's not that we tell customer to go to Mr. A or Mr. B or Mr. C. We front end it, we own it up, and then we get it resolved from whoever are there at the back end. Because if it is on me, if it's my customer, then no matter wherever the mistake has happened or things have gone wrong, it is my primary responsibility to guard my customer, to give comfort to my customer, and to resolve the things. There are many cases. They go even up to the ombudsman level, where we do put our point and we take care of the customer. So, but the thing is that, again, the literacy comes here. which platform to use. People should know that it's not all about convenience, and the catalog that you see on Instagram are very attractive catalogs. But 50% of the products are fake. Now what they do is, you will get the product, but it won't be having all those ingredients that were promised in the advertisement.
Right.
Sometimes you won't get it. And since the value is somewhere between 300 to 1000, you don't bother to complain. So all these things are happening. So it's for the customers. First of all, it's for only for the customers to be very, very sure as what they are doing. And in my various presentation, the first slide that I show is do's and do nots when it comes to social media platforms and digital payments. And it is based on RBI directives which are coming out periodically. But yes, the question that you asked, as a responsible bank, largest bank of the country,
Yes.
we own up the problems that the customer is having and we resolve them.
That really improves the trust. So from your startup product, FinHQ perspective, how do you see the regulatory, the banks, how they help you to build the trust?
So I'll tell you one example where I am in the
Especially
process
in this situation where ping ponging has happened. Has it happened to you?
no. So that is not something where I've headed yet.
Yet, okay.
Right? Like I am providing a fiduciary layer, which means I will own it up from all the perspective possible, right? Like where I am registering as a registered investment advisor. So which means I should be acting on the fiduciary level of the customer.
Okay.
Not just as a financial institution, I should be acting on behalf of the customer, right? Like looking at their financials, taking the right call from right from their shoes, right? So that is where I come from. And when it comes to regulatory aspect as such, where I see and what I do is I be a lot of verbose, because sometimes the regulations speaks about rule 1 to 50, let's say. Innovation doesn't happen within that rule 1 to 50. Innovation happens beyond that or even before that, right? Like, so when I am having such innovative thoughts, I put it all down. Like, even in the business plan which I've given to SEBI for getting the license, I've given a 50-page document saying like, this is what I'm planning to do. Right? Like, so that keeps the, discussion open with the regulatory, that this is what I'm planning to do. If there is something red flag, tell me upfront, I will change that. So this kind of dialogue should happen from the startup front, and also should be reciprocated from the regulatory front, right? So once this happens, once I see this happening, all the innovation will be within that regulatory sandbox, like what they are planning to do. And I believe like always innovation will be put forth by the regulatory as well.
So essentially what you are saying, everybody should own up their own domain. So this kind of thing will not happen. And problem solving will be faster.
No, what I'm saying is I am a fintech startup and I am bound to do it. So as he said, like the embedded finance is not just on the fintech platform. It is non-fintech platform which is not even regulated by any of these regulatory institutions, right? So having said that, like that particular ownership should be done by the financial institutions only. So that one point which they said education is that, like take the example of Uber or Swiggy. We know exactly where the problem is. If there is a delay, we blame the delivery guy, not the restaurant. If the food is bad, we blame the restaurant, not the delivery guy.
Right.
So that level of education is with the customer. Whereas when it comes to financial product, that line is smudged.
See, when you talk about embedded finance, it is nothing but invisible banking for good.
Yes.
So, offering a credit at the time of checkout, insurance when you need it, or offering a saving on a credit e-commerce platform. So it's an invisible banking for good. So the ultimate responsibility lies with the banks, which are as compared to other parties are having a bigger stake and are also a regulated entity.
Right. Okay, I think the timer is saying we are at the end of the session, but thank you guys. Thank you, Sandeep ji. Thank you, Manoj. Thank you, Vijayan. It
Thank
was
you,
a
Krishna, so
power-packed
much.
session. And I hope everybody got more into the embedded fintech, the trust factor, the scaling factor, and the innovation. Yeah, thank you very much.
Thank you.
I have a question. When you were talking about, acting from the point of view of customer, can you brief on the same? You said that when you think about a startup in fintech, you think in the point of view of customer. So how does that bridge the gap? Can you elaborate on the same?
Sure. So, SEBI mandates the registered investment advisor to be a fiduciary. So, what I mean by fiduciary is that, like, say there is a insurance company or an insurance agent. So, their role would be to sell that insurance product, no matter what. Like, they don't get to understand what is your financial position. Say, I want to sell you. How would I evaluate like how much of a cover you need? Right? Like, do you need 1 crore cover, 2 crore cover? I would always say 2 crore cover. Please, madam, you have the money, put it and cover yourself. But do they really understand what you are covering for? They don't understand. They don't teach you anything. So, whereas where I come from, I would do that. Evaluate what is the cover that you need, and then say like, this is the cover you need. Maybe you can try from different insurance products. Same goes with debt products. Same goes with like investments. So all of these are like various financial products or financial planning that one requires to do, right? Whereas everyone acts from that perspective. A lending company doesn't care about your investments, doesn't care about your thing. They just give you a loan, 10 lakhs, take it, right? They don't understand. As long as you are in a position to pay me back, I'm good to give you loan. It doesn't understand whether you need it, you have the debt servicing capacity, what is your debt servicing ratio. They don't look at all that. Whereas when it comes to registered investment advisor, that is mandated on that particular entity to do all these checks, understand the risk, and align your financials according to your need rather than what the financial institutions need.
A big round of applause to all the panel members for sharing such vast knowledge and suggestion. I now request Dr. Anup Tarafdar to present token of appreciation to all our panel members. I now